What is managerial accounting, also called management accounting? Managerial accounting is focused on providing financial information to internal users, such as managers and employees. Managerial accounting applies to all types of businesses, including service, merchandising, selling products, and manufacturing, as well as all forms of ownership, such as a sole proprietor, partnership, and corporation. The focus of managerial accounting is to provide information so that internal users can make appropriate decisions, both strategic decisions focused on long-term goals and operational decisions focused on the day-to-day operations of the organization. Likely you have already taken a financial accounting course, so exactly what is the difference between financial accounting and managerial accounting? Let's focus on financial accounting first. Financial accounting is focused on external users, such as shareholders, creditors, and regulators. There is therefore a focus on external reporting. The end result of financial accounting are financial statements, which are published for use by external users, often quarterly, semi-annually, or annually. And those financial statements are general purpose statements, meaning that they are intended for use by all external users. The information on the financial statements is based on what happened in the past, historical information, things that have already happened. And those financial statements are focused on the whole business, meaning they are consolidated. If a company has entities in every country in the world, the financial statements will include the financial data from every single one of them, altogether. The financial statements include only financial information, information that can be quantified in dollars and cents. And the statements must follow GAAP, generally accepted accounting principles, such as IFRS, International Financial Reporting Standards, or ASPE, Accounting Standards for Private Enterprises. And finally, the financial statements are generally audited by an external CPA, Chartered Professional Accountant. This is to verify that they are free of material misstatement. Auditing provides external users with a level of assurance with regards to the information included on the financial statements. So what is management accounting? Managerial accounting is focused on internal users, such as the employees, managers, or owners of the business. Managerial accounting information is not available to external users. Managerial accounting produces reports as frequently as required by management to allow them to make informed decisions. The reports produced are all special purpose reports, meaning that they are reports customized to each internal user's needs, reports that will allow them to make the decisions they need to make at that moment. And those special reports focus on what might happen in the future, trying to predict the future based on information from the past. Management accounting may focus on the whole company, but it's just as likely to focus on a subunit, such as a division, department, or geographical area. Because reports are special purpose reports, the coverage of the reports will depend on the internal user's needs. Managerial accounting reports include not just financial information, but any information which may be relevant to the decision needs of the internal users, such as non-financial information about the economy or customer preferences. Whereas financial statements must follow GAAP, there is no such constraint for managerial accounting reports. And the reports produced by managerial accountants are not audited by external CPAs. You can clearly see that managerial accounting is significantly different from financial accounting. It's important that you test your understanding of the content we've just covered by applying this new knowledge. Let's do that now by completing a Solve It question. Consider pausing the video and answering the question yourself before I answer it. This problem is asking you to classify each of the following as either primarily financial or primarily managerial accounting. If you can do that, it demonstrates your ability to apply your new knowledge to different situations. Number 1, determine if the proposed new product will be profitable. The wording in the question is giving you the answer. Notice it says proposed new product, referencing the future, and will be, again referencing the future. Both indicate a focus on predicting the future, which is all about managerial accounting, because internal users would need this information to decide whether to produce a product or not. 2. Prepare a cash flow statement for last year. Again, it's the wording that gives us the answer. Cash flow statements are one of the financial statements produced for external users, and it's about last year, which is historical information. This is financial accounting because it focuses on the past and it provides information for external users, following generally accepted accounting principles. Also, the statement of cash flows covers the whole organization and is therefore consolidated. Number 3, prepare a budget for the upcoming 5 years. And we're back to the wording providing the answer. Budgets are all about predicting the future, and then it says 5 years. This is managerial accounting because it focuses on internal users, such as managers. Budgets are used to motivate managers and to provide them with relevant information for future decision making. Number 4, record business activities for the past 6 months. We're recording information from the past, historical information. This is focused on financial accounting. However, note that managerial accounting makes use of the information within the organization's financial accounting system. So even though this is primarily financial accounting, it is used by managerial accounting also. 5. Determine if a product line should be discontinued. We can see the word if and should be. Both focus on predicting the future. This is managerial accounting because it's focused on providing information to internal users so that they can make a decision about the future production of a product. That's it for the Solve It questions, applying your understanding of differences between financial and managerial accounting. Thank you so much for watching.